SEC has been highly engaged compared to what was happening before. Before, it was just denying approval. And we just kept putting our filing in again, try,
Yeah.
dogged and determined. And so here we are. We think we're first in line, and that's why there is this January 10th deadline. But we like the idea that the SEC has been so engaged, and it's not just with us, it's others as well. We think a number of funds could be approved at the same time. And they've been asking not only one set of questions, but follow-up questions. And again, that's a very good sign.
In 2024, the crypto market is going to be dancing to the tune of the response to the spot Bitcoin ETF approval. The January 10th deadline will either act as a bullish catalyst to Bitcoin price and other crypto assets or result in an unprecedented crash. However, who will command this price action will depend on who cuts before the new year. ARK Invest has become the first to file its final Form S-1 amendment for its proposed spot Bitcoin Exchange Traded Fund, ETF, ahead of a reported United States Securities and Exchange Commission, SEC, imposed deadline understood as a requirement to be considered in the first wave of decisions in January 2024. The Securities and Exchange Commission, SEC, recently held a meeting with representatives of 7 of the 12 spot Bitcoin Exchange Traded Funds, ETF's applicants. During this meeting, the regulatory body notified at least 2 of the 7 issuers to submit the updated filings before the end of 2023. The SEC stated that the companies that miss submitting the final updates to their spot Bitcoin ETF applications by December 29th could potentially miss the spot in the first wave of approvals expected by January 10th. While the representatives of the 7 companies included executives from BlackRock, Grayscale, ARK Invest, and 21 Shares, among others, it is not clear who the deadline applies to. ARK Invest CEO and CIO Cathie Wood sheds more light on the ETF fillings, approval, and where the SEC stands on this. Also, she talks about ARK investing as a company and the effect inflation has had on the company funds. As we get into the video, don't forget to like, subscribe, and drop your comments below.
We're as optimistic about Bitcoin as we ever have been, but there are a few regulatory and tax uncertainties, and we had been waiting for the discount between GBTC and NAV to narrow. It was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally, and now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment. And it's just a moment of uncertainty between now, we think, and January 8th to 10th, somewhere in that range, perhaps. But we, out of an abundance of caution, didn't want to take any risk. BITO, the ProShares, is already approved. There's no regulatory uncertainty having to do with it. So we chose to maintain our exposure through BITO for the time being. And as I mentioned before, there are some tax and regulatory uncertainties still as part of this process. We don't know exactly who's going to be approved and whether they've met all the criteria that the SEC has put before us. We know we have, but we don't know if others, including GBTC, have. We just don't know. So again, out of an abundance of caution, and GBT's discount, again, it was as much as 50% relative to NAV. So not only have we enjoyed this year the run in Bitcoin itself, but we've had the nice closing of that discount. So it's been double good news for us. We are very happy that a couple of things have happened. That this idea that interest rates were going to continue moving higher has been proven incorrect. And I think even the Fed, while there is that small possibility, even the Fed is now starting to talk about the other side of the interest rate move. And so I do believe all we've seen so far is a reaction to that macro phenomenon or judgment call. We went through our flagship strategy, and all of our strategies went through a very difficult time from February 21 through December of 22 as interest rates, first of all, were presumed to move up or forecasted to move up. And then when they did move up, so it was almost like a double discounting. And so we've seen the first installment of the correction there to the upside for our funds with this notion, and it's again the forecast that interest rates will come down. And, you know, we would presume that if they do come down, for the reasons we think they're going to come down, the most important one being deflation, then our funds will be in good shape because we are very, our companies thrive on deflation. Technologically enabled innovation is deflationary.
The Federal Reserve is set to begin the new year after it signaled that a momentous shift in monetary policy is underway amid signs that high inflation is finally beginning to ease. During their final meeting of the year earlier in December, central bank policymakers signaled that a nearly 2-year battle against inflation is finally coming to an end in a long-awaited policy pivot. In addition to holding rates steady for the third straight month, Fed officials forecast a series of interest rate cuts in 2024 as inflation falls faster than expected. Cathie Wood talks about inflation and its effect on ARK investment funds, pointing out that the funds are in good shape and a deflationary environment is a thriving environment for technological advancement. Let us now get into the details.
We were very gratified at our asset retention in 21 and 22. In fact, we had net inflows, if you combine both years, of more than $18 billion. And this year, one might expect that those who average down into the very steep declines that we were seeing in 22 especially, might take some profits. So we have had, I know for our flagship strategy, it's roughly $500 million in outflows, maybe for all of our strategies, 1.8 million. So maybe 10% of the inflows that we enjoyed during 21 and 22. So again, we're very gratified and grateful to our clients for the support that we continue to receive.
So has the outflow stopped?
We have had days of, on balance, very recently, yes. And I think part of this is many people do tax management toward the end of the year. And so some of the outflows might have been associated with clients who got in at a high cost base and were just harvesting some tax losses. But I think we're through that. Actually, we put out a piece for Resolute, our distributor, who, and we basically showed to them, if you rebalance our strategy when there have been big moves one way or the other, if you rebalance regularly or based on a rule like when the fund's up 15% relative to everything else, take some profits. And what it showed, that study showed that if you are disciplined that way, that over any rolling 5-year period, it is highly likely, almost 100%, I'm not quite sure if it's quite that high, but that you will beat the market, meaning as measured by the NASDAQ or the S&P, over a rolling 5-year period. And so a lot of our funds are with advisors who are very sophisticated and responded somewhat, perhaps in this tax management part of the year, to that message.
Cathie Wood's ARK Invest is buying up shares of the ProShares Bitcoin Strategy ETF, BITO. ARK's next-generation Internet ETF, which previously held a large amount of Grayscale Bitcoin Trust, also exited out of its position according to its holdings. Bloomberg intelligence analyst Eric Balchunas said that the move is likely because it's using the money from GBTC as a liquid transition tool to keep beta to Bitcoin while it legs into ARKW or ARKB. Balchunas noted that this move wasn't a surprise, and in his opinion was smart. Better to give your own ETF a nice assets under management boost, he said. The move was addressed by Cathie Wood, CEO of ARK Invest, in an interview with Bloomberg TV, where she said that the move to exit GBTC and enter BITO was made out of an abundance of caution. BITO is already approved. There's no regulatory uncertainty having to do with it, so we chose to maintain our exposure through BITO for the time being, Wood said. As Balchunas said, and Blockworks previously reported, analysts believe that ARK would choose to sell its current GBTC position to move assets over to its Bitcoin ETF, According to filings, the ETF, if it gets approved, would trade under the ticker ARKB as the ARK21 shares Bitcoin ETF. Additionally, RKW sold more Coinbase, continuing a selling spree that's been happening for several weeks. So far this month, ARK sold nearly 3.7 million shares of both Coinbase and GBTC. Roughly 1.5 million of those shares are Coinbase, while the asset manager sold over 2 million of GBTC, which helped to fully exit its position. Both ARK Invest and Grayscale are aiming to launch Bitcoin ETFs, though both have different approaches. Grayscale is trying to convert GBTC to a Bitcoin ETF. Earlier this year, a court sided with Grayscale, giving the firm a win over the Securities and Exchange Commission. The win meant that the SEC had to reevaluate Grayscale's proposed GBTC conversion into an ETF after the regulatory agency denied the initial application. Do you think the January 10th deadline would be met by the SEC, or will it be further extended to accommodate more approvals? Let us know what you think in the comment section below. Also, don't forget to hit the like button, subscribe, and turn on notifications.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.